Real estate investment in a family business. Unlocking the potential of real estate investment for your family business. A journey into best practices and benefits. The importance of real estate investment for a family business. Introduction. Real estate investment provides numerous benefits. It is a secure and significant component of a family business's overall portfolio and growth strategy. These include income generation, wealth preservation, diversification, and potential capital appreciation. This section will delve into the importance of real estate investment for a family business, underlining its security and best practices for maximizing its benefits. 1. Diversification and risk management. Portfolio diversification. Real estate investments offer diversification by adding a tangible and non-correlated asset class. Diversification reduces the risk of overexposure to a single asset class, industry, or geographic region. Stable income generation. Real estate investments, such as rental properties or commercial buildings, can provide a stable and predictable income stream. Rental income from real estate can offer a reliable source of cash flow, reducing dependence on the core business's performance. Hedge against inflation. Real estate investments have historically shown resilience against inflationary pressures. Property values and rental income tend to increase with inflation, preserving the purchasing power of the family business's assets. 2. Wealth preservation and long-term value. Asset appreciation. Real estate investments have the potential for long-term capital appreciation, increasing the overall value of the family business's assets. Well-located properties in growing markets or emerging areas can experience significant appreciation over time. Tangible and intrinsic value. Real estate investments provide a tangible and physical asset with inherent value. Land and properties can serve as a long-lasting legacy and store of wealth for future generations of the family business. Wealth transfer and legacy planning. Real estate assets can be transferred across generations, allowing the family business to create a legacy. Proper estate planning can facilitate the seamless transfer of real estate assets, preserving wealth for future family members. 3. Best practices in real estate investment for a family business. Clear investment strategy. Develop a clear investment strategy for real estate, aligning it with the family business's overall goals, risk tolerance, and investment horizon. Define the types of properties, locations, and investment criteria that best fit the family business's objectives. Thorough due diligence. Conduct comprehensive due diligence before acquiring real estate assets, including financial analysis, market research, and property inspections. Engage professional advisors, such as real estate agents, appraisers, and legal experts, to ensure thorough evaluation and mitigate risks. Risk management and mitigation. Implement strategies to protect real estate investments, such as adequate insurance coverage and proactive maintenance and repair programs. Regularly assess market conditions, property performance, and tenant profiles to identify and address potential risks promptly. Active property management. Implement effective property management practices to ensure optimal performance and maximize returns. This includes tenant selection, lease negotiations, property maintenance, and ongoing tenant communication. Long-term investment perspective. Real estate investments generally require a long-term perspective to realize their full potential. Avoid speculative short-term approaches and focus on acquiring properties that align with the family business's long-term wealth goals. Professional expertise and networks. Engage experienced professionals such as real estate advisors, property managers, and legal counsel who specialize in real estate investments. Build a network of industry experts and peers to gain insights, share knowledge, and identify potential investment opportunities. Regular performance evaluation. Monitor and regularly evaluate the performance of real estate investments within the family business portfolio. Assess key performance indicators, KPIs, such as occupancy rates, rental income, cash flow, and property value appreciation. Make informed decisions based on performance evaluations to optimize the real estate investment portfolio. Continuous education and market research. Through continuous education and market research, you can stay updated on real estate market trends, regulatory changes, and emerging opportunities. Attend industry conferences, workshops, and seminars to enhance knowledge and network with professionals in the field. Financing and capital management. Develop a sound financing strategy for real estate investments, considering appropriate leverage, interest rates, and capital structure. Effectively manage cash flows, debt obligations, and capital reserves to ensure financial stability and liquidity. Integration with overall business strategy. Align real estate investment decisions with the family business's overall strategy and objectives. Assess how real estate assets can complement and support the core business operations and goals. Conclusion: real estate investment is essential to a family business's wealth management and growth strategy. It provides diversification, stable income generation, long-term value appreciation, and wealth preservation. The family business can optimize the benefits of real estate investments by following best practices such as developing a clear investment strategy, conducting thorough due diligence, implementing risk management measures, and actively managing properties. Regular evaluation, continuous education, and integration with the overall business strategy will further enhance the success of real estate investments within the family business. Thank you for watching. Please share to the members of business community.